Hi, good afternoon, everyone. And I hope you're well fed and eager to go ahead on today's agenda with PMS Bazaar. Thank you, PMS Bazaar, for inviting me. As most of you are aware, GIFT City has become a hub for financial and tech innovation in India. The Indian government's focus on GIFT City as a platform to promote financial innovation continues to grow from strength to strength. And that's where, this presents a unique opportunity for us as advisors and investors to really make good of what we have on hand. So Edelweiss, I don't know how many of you worked with Edelweiss or invested with Edelweiss, but Edelweiss is one of India's premier asset management company. We manage more than 170 lakh crore rupees assets under management of all products put together. And that's where we came up with the next leg of innovation, which is our GIFT City offering. The fund itself is a Category 3 AIF, which helps investor unlock the opportunity within GIFT. So let me take you through what this product is. But before that, I think it's important to know what this product addresses as a problem. Now, if you are an investor or you're an advisor, what is the biggest problem at hand for you when you're selecting to invest in India? 2-3 big issues come straight up. The first is obviously that you have to invest in India in INR. Now, if you're making money in US dollars and you're investing in INR, that becomes not very good, not very even playing field. The second big problem is Indian domestic mutual funds have a 10% withholding tax, which on redemption is held and then you have to settle it later, etc. So all those tax complications come into picture. And the third big issue is that if you're investing in similar products in India, you have to have a very active look on where you invest, and you have to continuously, if the investment is not doing well, you have to churn. So that is where we came in and we said we need to provide you a solution for all of these three problems and probably provide you more solutions which you don't know. And that's where the GIFT City multi-manager concept came into existence. Now, what exactly is multi-manager? Multi-manager, in a sense, is that through this product, you will be investing in multiple funds through GIFT City in US dollars. Let me explain that to you a little bit more. A lot of NRIs that I have interacted with and a lot of NRIs who come to us, India is more or less, for Middle Eastern NRIs, the place to go invest. But what about British NRIs? What about US NRIs? For them, India is a very small part of their allocation. And a lot of those guys actually invest in US because they want that ease of investing in US dollars. And also the fact that if you look at global market returns, what you find out is that US is probably the first to our S&P 500 and NASDAQ returns over the last 20 years. What you find out is these two indices and funds in these markets have outperformed everyone else. And thanks to tech and AI and a lot of growth there, that now we know is peaking out. And the world is looking for the next growth engine, next place which will give similar returns over the next 10-20 years. And we all know with tailwinds of India, India is the place to go. Now, if we can give you a product that does this very effectively. So we spoke about the fact that this is a product that will invest in US dollars. It is a product that will give you multiple solutions to work. But what we've created is a structure where if you give us, say, $100, it will be invested, 60% will get invested in Indian flexi cap funds and 40% will get invested in Indian mid cap funds. Now that's where a lot of clients say, hey, flexi cap is an all cap solution, so that's great, but why Indian mid caps? And when we dwell down on data, what we found out was that on your screen are 5 years, and I will show you 10 years rolling returns as well. What you clearly see is the best place to invest is India mid-cap. Indian mid-cap companies actually give you far superior returns than large cap and small cap over a 5-10 year period. That's the chart on 10-year rolling returns. So clearly, if you need to create alpha, you have to go into Indian mid-caps. And that's where another point came on us, which was clearly India is now coming out of that big, shadow where Indian companies are growing very, very rapidly. And what we saw in the last 20 years is we've plotted on your screen a chart of the various markets, top markets of the world. So on the left-hand side are emerging markets, and on the right-hand side are developed markets. So their main indices. So for US, it is S&P 500, and say for India, it is Nifty 500. So their main indices. What is the percentage of companies that are multi-bagger? And what we were surprised with was India has the highest percentage of multi-baggers. Multi-baggers are stocks that have gone 10 times over. So clearly, the big opportunity in India is mid and small cap investing. And that's where we came up with a solution, which is called the India Multi-Manager, which in a sense will give you exposure to India through 4 flexi-cap funds and 4 mid-cap funds. Now, 8 funds through 1 fund. So this is a fund of fund which will get you invested in 8 schemes, 8 mutual fund schemes. Now, how does this selection work? Because the selection is the key here. And if you're an advisor or if you're an investor, you will be driven by data to pick where to invest, right? That's basic logic that you will follow. And we followed a very similar logic, but we added more to that logic. So the first step is to create universe out of which you will end up selecting. So how does the universe creation happens? There are 3 basic criteria. We will pick out funds that are from the top 15 asset managers. So the top 15 asset managers by their entry AUM will qualify. The second criteria is funds with only 10 years of track record. So we need long stated track record to check if the funds are consistent or not. And the third criteria is that the underlying funds should not have more than 10% exposure to US equities or taking cash loans, which is fair enough, right? If an NRI is coming to India, he wants Indian equities. So very simple, straightforward. Now, how do we do the selection out of this universe? So the selection is also very, very straightforward. We look at 3-year, 5-year trading returns, 3 and 5-year rolling returns. We check for information ratio, which is how often the fund has beaten its own benchmark. And the final one being Sharpe ratio, which is risk-adjusted return. The higher the Sharpe, the better it is. And we do a cumulative scoring of these 6 factors on the funds that made the universe cut. Once that is done, we pick out the top 3 funds from both flexi cap and mid cap. And the 4th fund will be Edelweiss flexi cap and Edelweiss mid cap. And very, very proud and happy to report that both Edelweiss flexi and mid cap have made the cut on its own merit. So that's, we're not shortchanging investors by giving them a product that is overloaded with it. And that's where, some of our competitors come into picture, because if there are multiple structures that are running in GIFT, but if you invest in some of those, you're getting allocation or exposure to one asset manager. That asset manager has a style, and when that style is not at play, so if you're a growth fund manager, if growth is not doing well and value is doing well, you will suffer. And likewise, if value is doing well, growth is not, the fund will underperform. And that's where this fund, having multiple funds inside that fund structure, gives you that diversification in style as well. And all this put together, what we again do is we run this every year. So there will be an annual rebalancing. Every year this rebalancing will take shape. And if a fund is not doing well, it will get exited. And if a fund is doing well, it will stay in. evidence, look at the chart on the right hand side. SBI Flexi Cap was doing very, very well in 2022 and then underperformed in 2023. It got knocked off and got replaced by HDFC Flexi, and what we see is HDFC Flexi is done very, very well. Now there is also a qualitative check here. So it's not just straight line ranking by returns, there's also a qualitative check, which is essentially if there is a fund that has made the ranking cut, has done very, very well on ranks, but there is a problem with the underlying portfolio, it is too concentrated, or there is a SEBI audit on the asset manager, or there is a front-running case, we will not subscribe to that EMC's fund. So we are giving you a great mix of quality with a good performance track record measured scheme. Now, very, very simple to understand and very simple to explain to clients as well, because I could have made a product that is super complex, running quants and, talking about EBITDA and profit margins and ROE and whatnot, and how do you explain it to your clients? End of the day, you have to, as an advisor, explain it to the client. And as a client, understand the product as well. And that's where when you package it all together, what you have is a beautiful, beautiful, very simple solution to work with. Now that's all great and beautiful to look at, but what has happened in terms of performance, which is what we work with. On your screen are USD returns, and we are benchmarking this against a tough index. We're not looking at Nifty 50, we're looking at NSE 500. And when you look at the columns here, what you see is the fund itself, the strategy itself has outperformed NSE 500 over a 3.5-4 year period by almost 20% cumulative, which is a great outcome because NSE 500 is tough to beat. Most funds are finding it very tough to beat NSE 500. And also what you will see is the nature of returns is quite linear. If you take a look at a year like 2022 where markets didn't do very, very well, unlike some of those high alpha generating products which do very well in a good year and very badly in a bad year, this one has not done that badly. Look at 2025 as well. So essentially what the fund's done is it has done okay-ish in a bad year, but more than made up in good years where markets have done well. So in all, a very, very simple and a very easy offering to work. On your screen, what you will see is the sectoral allocation, and what you clearly see is some of the sectors that are in flavor. So financials, and a few panelists presented financials being the sector that should do well. You clearly see financials as a top weight. You also see is India is driven by consumption. So consumption itself is a top weight in the portfolio. So you're getting, real good active funds that are also changing their underlying portfolio, and if the fund is not doing well, we turn the fund as well. Through all of this at a very, very easy going cost, and that, my friends, is the underlying portfolio that we're running today. So 15% to each flexi cap. So 4 flexi caps making 60%. Those are the 4 flexi cap funds, which obviously now you can't see. But then there are 4 mid-cap funds. So the 4 mid-cap funds are Edelweiss mid-cap, HDFC mid-cap, Kotak mid-cap, and Nippon mid-cap. So all of them very, very well established funds. That is the Edelweiss multi-manager fund. I will sum it up here. It's an easy product to offer to clients, which is in a FOF structure and at costs which are as much as domestic mutual funds, where you are investing in US dollars through GIFT. Last point on tax. Now, in GIFT, if you had an underlying portfolio of stocks, The tax in GIFT City is on fund level. So the fund would be taxed at 12.5% long-term capital gains and 20% short-term capital gains. In this structure, there is no tax on the fund. So the fund is not taxed, and obviously for clients, the product is tax-free. So all in all, an absolutely tax-free way to invest in India in US dollar. Thank you very much.